Hello, everyone. My name is Tony Pearl, and today I have the pleasure of having a very fine gentleman that I'm very happy to be associated with, and you will be too by the end of today's brief web presentation. His name is Paul Ritter, and for those of you who don't know him, he is the king of credit repair, and specifically for us real estate investors, he has some very valuable knowledge that you'll find especially applicable. He will help you to unlock the cash and the equity out of those deals that you have when you install your tenant buyers or when you sell your house to an owner occupant who has bought the house on owner financing and has a balloon payment. Typically, when we do this business, when we install a tenant buyer, they may often have credit issues and they may want to buy the house. They'll put a down payment down or have some skin in the game. And after a while, they will really want to refinance to get themselves into a lower monthly payment, a more proper ownership position, and just have that true pride of ownership and get the bank financing. In order to do that, they have to have credit repair done so that they can qualify for the bank loans. Now, for us, it's particularly important because when we have our tenant buyers or our owner financing occupants pull the cash out, refinance or buy the place, we're able to pull the cash out and get the equity, unlock the equity. So we have a big back end of $60,000, $80,000, $100,000. We're definitely going to be motivated to have these people cash out and put the money in our pocket, of course. And for them, it all works out. So anyways, allow me to please introduce Mr. Paul Ritter here. Paul has over 25 years experience in the mortgage and credit enhancement industries. He's developed software which invokes mortgage underwriting guidelines. It's very useful for anyone looking to buy a home, wants to run what-if scenarios, and is especially useful for lease option transactions. Paul has formerly owned and operated several mortgage companies. He is currently the owner of Credit Investigation Service, doing business as My Credit Team. They specialize in credit enhancement for the real estate industry. He also owns a screening company which provides the front-end piece to evaluate potential tenant buyers. He is the expert in building business credit. Paul is well-versed in identity theft protection and repairing a credit report after an ID theft incident. He is FICO certified and is an expert in his field and a national sought-after speaker. So without any further ado, please allow me to introduce you to my friend and soon-to-be yours, Mr. Paul Ritter. Paul?
Well, I thank you. Thank you, Tony, for that warm introduction. I appreciate it so much, and I appreciate the opportunity to talk with you today and all those in your universe. And I'm looking forward to offering some good information for everyone. Just kind of a brief summary of who I am, where I come from. I was a mortgage broker a long time ago, worlds ago, back in the 90s. And I've been doing credit repair since about 1998. Started this company in 2005. It's a small family-run business here in Western Pennsylvania. We do business in all 50 states. It's myself and my wife primarily, a couple other family members, and we've been growing leaps and bounds, and we have the blessing of having endorsements from Ron LeGrand and Joe McCall, John Iannotti, Chris Prefontaine, Mitch Stefan. Mitch Stephen. We've been doing this for quite some time, and I've been out there on the podcast circuit. So if you've seen me on any of those before, this won't be a total repeat, so there'll be some good information here as well. So please stick around, and we're looking forward to doing business with you. We've changed the dynamics of much of our back-office software and our tracking mechanisms over the course of the last just several months. And the dynamics of the way that we do business now, we've really upgraded things. So if you've tried us before and gotten away from us, please come on back and see us. Even our intake form is a really slick intake form now. It educates the people as while they're actually inputting their information, it educates them to the process. And here's the coolest thing. My wife and I, we're real estate investors too. So we understand what your goals are, especially in the world of lease options. If you would talk with Ron LeGrand, he has a saying. I guess when he talks about sandwich lease options, he basically says that it's the goose and it lays the golden egg every month. Well, think of me as the goose slayer. I'm the one that actually gets that deal to the finish line, and the finish line to me is so that they can put their name on the title, the tenant buyer. And while it doesn't sound appealing that they're not going to lay that golden egg next month, the better side of that is that you're done with the deal and you cash out and you get your big money in the backside, and they get what they want, which is the ownership interest in the property. So you could take that money and turn around and invest in more properties, and that's how your business grows. It's not the $200 or $300 we make per month. It's the $30,000 or more when we cash out on these deals.
Absolutely.
So that's the overview. Oh, go ahead, Tony. Go ahead.
I'm sorry. So basically what you're saying is sometimes there are deals where a lot of deals where we're going to want to keep the goose alive, where we're going to have that massive cash flow on there, and there may not be such a big back end. So in those cases, we don't care if these particular tenant buyers truly ever cash out, because we have that massive cash flow every month, and where there's not much incentive for them to eventually cash us out. Of course, if they do, awesome, fantastic. Then there are other deals when we do have a big back end and maybe not so much cash flow, but we have that incentive. So those are definitely the ones where we will want to help encourage our tenant buyer to get their credit to the point where they're able to cash out and be in that ownership position. Wouldn't you agree?
Exactly. Yeah? Exactly. So what I'm saying is, and what we're both saying here is, my service may not fit for every deal, but having said that, most deals, you're going to get more money on the back end than you're going to get on the front end in most deals that I've seen in this industry. And
right.
And for those, that's where our sweet spot is.
Exactly. Okay. So Paul, in a minute you have a nice presentation, I believe, that you're going to have for us with video and maybe some slides, a slideshow, and you're going to go walk us through that. What are they going to get out of this presentation, and why should they take the time to watch this today with us?
Okay, fair question. Before we leave that last topic, that is, there's one more thing too. Like Jay Connor, for example, who also endorses me. He's a member of our community, and as a member of a community, you don't want to have a reputation going around town that you're not cashing people out. You're setting them up for failure. So if that's part of what you're looking at doing here to make certain that your name within the community always is on the up and up, again, cashing people out gives you that stigma with your business.
Right.
So the reason why they should be watching this video today is because the lease option exit strategy is probably one of the most important elements to the profitability of any deal. And the more you know about every piece of it, on the buyer side, or buying things, buying properties, buying them correctly, and the more you know about selling them correctly and how to put together the paperwork, and then what criteria underwriters are looking for in order to cash people out, is extremely important. And I'm going to go through some of that stuff today. We'll actually pull back the curtain, and you'll see some of how they're basically looking at these files. In addition to that, we're doing criminal background check, Megan's Law report. But here's the most important element, is we let you know how long it's going to be for them to be mortgage ready, even before you put them into the property. We give them a documentable, trackable action plan, and we give you, the real estate investor, access so that you can play along while they're going through the credit repair. You're not going to get that with any other company. That's what distinguishes us.
Mm-hmm. That's fantastic. So as a real estate mentor, I work with my students to help them understand all facets of the business, to help them deal with sellers, with buyers, get the properties ready, everything. And a lot of times when we are selling the properties, we have a tenant buyer, we're marketing the properties, and we have a lot of people coming in who are interested in buying the house. So a question I'm often asked is, how do we screen these people? And a lot of times in the past, we've had to take, screen the person coming in for their background check and for their credit check, and then we go to someone else to pre-qualify them for a mortgage. So are you saying that you have a one-stop shop where you're able to take care of all these things, do the background check, credit check, and help them become mortgage ready by dealing with the right mortgage professionals? Is that what you're saying, I hope? Loaded question, right?
It's a loaded question. Thank you for that question, Tony. But anyhow, the answer to that, to all the above, is yes. And here's how all this works. It's really cool. So when I first sat down with Ron LeGrand and really devised this whole company, the screening company, a while ago, we saw that there was a hole in this industry, and the hole is, I mean, you can get a report, Landlord Station, TransUnion, Smart Moves, and a lot of other places out there. They're basically set up to rent to somebody, and they don't go into the dynamics of what's going to take to qualify for a mortgage. And I'll show you a little bit of the stuff later on. But the debt-to-income ratio, we call it the affordability report. That lets you know what's going to need to happen in order for somebody to qualify for a mortgage from a debt income and a budgeting standpoint. For example, let's just say the guy's a landscaper, and he has with his business, he doesn't declare all his income, but he could show enough income in order to qualify. We'll let him know how much he needs to have on his adjusted gross income on his tax returns in order to qualify for a particular house of such a value with the amount of money that he's putting down, plus taxes and insurance. So basically all that mathematical stuff, they need to know that stuff. It's stuff they should have taught us, Tony, in high school and college, but they failed to do so. So from the screening perspective, these are really important things. Also that we issue you some disclosures and let them know what they need to do. And within those disclosures is that they're not going to materially change their income or their debt load. In other words, a guy's not going to go out and buy a Mercedes right before he goes, he buys the house because his score went up magically because he was working with us, and now he sees that Mercedes and he wants to buy it. Now he's got an $800 a month payment and he doesn't qualify. So it's those things that really matter to get these people to an end game. And you don't want to see yourself in front of some judge later on saying that you set somebody up for failure and them claiming some sort of Dodd-Frank suit against you. So this protects you against those type of elements. And that's just on the screening side. So that's what's unique about it. Now, on the credit repair side, people think that credit repair is a commodity item in this industry. And I'm here to tell you, folks, it's not. Here's the business model of 99.9% of the credit repair companies out there, Lexington Law, creditrepair.com, and everybody else. And that is their business model is to extract as much money as they can from the people. And in keeping with that model, what they're doing is they do one dispute per month. So let's just say your average client has 10 negative items on one credit bureau. Tony, that means they have probably about 30 across 3. Lexington Law disputing one thing every 45 days. You can do the simple math. It takes years for them to get through just the first level of disputes. Now, in that same time frame, I would dispute all 30 negative items. We may get 10 off, which means they still have 20 negative items on the credit report, but it's a quantum leap from where they would have been had we done just one. And that's the magic that gets this thing done quicker. You as a real estate investor, you want to know you're going to get to an end game, and you don't want to know that you're going to get there much quicker than other companies would get you there. So it's the disputing of all negative things all the time, and helping them build new credit, age of credit, mix of credit, balance limit ratio, and all the other components that contribute to 65% of the score. 35% of the score is the disputing of negative things. So that's not even the lion's share. It's only like 1/3 of what the score is. So we're working in all those sandboxes to help make certain that their score gets up. So that's why we have our average improvement is 85 points in a 9-month time frame or less. So that's a big number. We're getting about 60 to 70% of the negative items removed. And those are the components that are important for a real estate investor to get to. We call it the second closing table. The first one is where they just basically get the keys and move into the property. The second one is where they're actually putting their name on the title and they're cashing out on the property. Excellent. So before they even start, we're going to let you know the time frame it's going to take for them to get mortgage ready, and with the understanding of the budgeting and the affordability stuff and the filing of the tax returns if need be, and then also inclusive in that is the credit restoration.
Okay, that sounds really good. All right, and I understand that after our presentation, by the way, if you who are listening to this, if you stick with us until the end, Paul, you have some credit tips and hacks that we're going to share there. Isn't that correct? Can I twist your arm there?
There'll be some giveaways. Yeah.
Okay, great. Yeah. Awesome. Well, with that in mind, why don't I turn it over to you? You can set up your just share your slideshow, your presentation with us now, and we can go ahead and do that. And if we can get through that efficiently and quickly, then we can get to the interview wrap it up at the end, and then we can show what our listener, our viewer, would need to do to get more information to help them out with their credit or their tenant buyer's credit or loved one's credit, anyone that they believe would be benefiting from your expertise and your credit repair services. So without further ado, sir, go ahead and take it away.
Okay, and Tony, can you see my screen?
I can see your screen perfectly, yes.
Okay, so the first thing you'll see on here is my phone number. That's for you, folks. That's not for the general public. Use it, but don't abuse it. That's my personal cell phone, so you have a direct line to the company owner. And again, my name is Paul Ritter, R-I-T-T-E-R. I am the owner of my credit team. We also have a division we call pre-qual team, which Screen the Tenant is a part of. They're both essentially the same thing, and we have an internet site for each of them, pre-qual team or Screen the Tenant. You can send them to either of those two websites. It doesn't matter. They both effectively do the same thing. It's just the dynamics of the name. Screen the Tenant is a little bit more mature of a website. Basically, what we're doing is we're pre-qualifying. Think of it this way. It's a pre-qualification of a person getting a mortgage. And then finally, on the bottom, rent-owned free listings, we've got a website that you can put your properties up there for free. It's additional exposure for your properties. And if an application comes in, the application goes to you and to us at the same time. And it's basically an intake for us to be able to get the application, and again, for you, additional exposure. And it's free, and it's free for people to go there and visit that website. So those are the three companies that all work in tandem to provide these level of services. So as I mentioned here, some of the endorsements, these are all people that I've done podcasts with in the past. So if you recognize some names and faces here, we've been in this industry for quite some time. And this is all specific to our industry. Notice that we're not just out there just peddling screening services or credit repair to other industries, car industries and such. This is our sweet spot, folks. This is where we live in the real estate investment community. And that's why my wife and I were also real estate investors too. So we're not going to say anything to mess up your deal. You know, we're not going to say something like the person who owns the property when you may not actually own the property. You just might be controlling the property. So we understand the dynamics of all the types of transactions. Okay, I'm going to get to this here. This is probably the core of what we're talking about. Now, this is just an image file. So I'm going to exit out of this, and I'm going to actually show you how we use this tool to do the affordability analysis. And it's our back office tool on our side. Now, when you get it, whenever we're done, you'll notice here, I don't know if you can see my mouse moving, but it says Joe Sample right here. That's where they're going to sign. They're going to sign their name, and above it says, I've reviewed these figures and that they agree that they're indicative of my income and my expenses. I understand the ratios are based upon today's interest rates and so on. And in the end here, it says that they're not going to materially change their income or their debt load. And then they sign here. So again, we talk about finding yourself in front of some judge where you're set them up for failure because they couldn't afford the property. Well, they never would have gotten past this level here had they not been able to afford the property. So here they're basically saying, I make this much money. I can show I make this much money. And my ratios were in line at the time I moved into the house. So even if they do something to destroy them, the ratios, then we go back to the signature here. So I'm going to bounce out of this and go over to a place where I actually have this as a working model. Now you can see my cursor moves. And I'm going to highlight a couple pieces here because this is, again, the meat and potatoes of it. I'm going to look at this CNAC automobile loan where I just highlighted here. This is a business debt for this particular person, $411. I've put it in brackets, which is not parentheses. It's not subtracting it. Just basically brackets means it's a zero as far as the debt-to-income ratio is concerned. And why is that? Because it's a business automobile. And the guy makes payments for the automobile with his company. For example, let's say somebody didn't realize that they could even do that. Going back to the landscaping guy, I say, hey, listen, you're going to be cashing out 2 years from now. If you start making your payments with your business for your automobile now, then I can ignore that debt that you have on a monthly basis. Remember, they have time to adjust this between now and the time that they're going to cash out.
Nice.
So that would be an example of how you could work around a guideline. It's not a workaround. It's actually what's really happening. The business really is paying for this automobile. He just doesn't know how to position it. So that's one, for instance. Now, within the framework of this sheet down here, there's so many what ifs, nested what ifs built in here. And if my score were to go down to 550, or if I was starting with a 500 credit score, you see as I put that in here, it says credit score unacceptable, contact my credit team. And then certain loans would not be available at a lower credit score, and certain loans are available at a higher credit score. And if I lower my down payment, now I'm less than 3%. Other messages pop up, so I have to have certain. It checks all along the way that if you're out of range in any one of your asks on the property, that you should change the dynamics of your deal. For example, the same thing is down here on the bottom. Whenever you say how much of rent can they afford? Well, that may not be the right question. The right question is, what amount of rent should we have in here that is within the framework of the system? In other words, the rent-a-meter, what they are asking for, and what would be acceptable from an underwriting standpoint later on. Let me give you an example. If I say on this particular house, the monthly rent's $600. Now that would be crazy for a $100,000 house, but if I did that, then I'm setting them up for failure because I'm creating what's called payment shock. And within payment shock, now the new payment on the house is going to be $1,200, but yet you've set them up with $600 monthly rent. So an underwriter is going to say, no, this is not a good deal, because they're actually going to have to pay more, and they seem to have struggled to get to the point where they're at right now.
So what you're saying is that you can basically play with the numbers to know what they need to do and how they need to be adjusted in order for them to be properly positioned for a mortgage broker and a loan and a bank to be able to qualify.
Exactly, and we do it on the fly. And so we're gonna make this whole thing work. And once we make it work, now we're going to turn back and we're going to provide this to you as an addendum that can be signed at closing. So this is all kind of behind the scenes stuff that we're doing for you and you don't have to figure all the stuff out, know the underwriting guidelines, all that, because know that we know it. But you're not going to get this with TransUnion Smart Moves, and you're not going to get it with Landlord Station or any other screening company out there that don't even know what debt-to-income ratio means.
Right.
So this is affordability. And if you want to get your people to the cash out closing table for $50 per person, we're going to be figuring this out, as well as doing all those other things that I mentioned too. How long to be mortgage ready, criminal background check, and Megan's Law report, and then referring them over to the credit repair company if needed.
Nice. So we as investors, we're not going to be messing with all these this fancy spreadsheets and all this crap right here. That's what you guys are going to be doing. And for the paltry price of only $50, you're going to be able to take care of all this to help our people be able to qualify. Correct?
Exactly. And here's the coolest thing, Tony. Guess what? You don't pay for it. They pay for it.
They pay for it. What? Even better.
That doesn't cost you a dime. So why wouldn't you do it? Why wouldn't you have? Think of it this way. It's the Cadillac or the Mercedes of this industry. It's the best. It's the highest quality of screening that you can get for this industry. If you want to rent, if you want to be a renter, or you want to rent properties only, then use a rental site to do your rental screening. But if you're doing rent-to-owns, you can use a rent-to-own site, and this is a rent-to-own tool. And this is the best in the industry. It's the only in the industry that I know of right now. Now, there is another way of doing this, Tony. I mean, if you want to go to a mortgage broker and ask them to do it for you, they will do it, but they typically charge about $500 a person. And here's why they're really not thrilled. Even at that, they're not thrilled to do it, because guess what? They're not going to get a loan right now. They'd have to run it through their online underwriting system called DU or LP. So they have costs involved in that $500.
Yes,
They'd have to pull the application. they'd have to take the application over the phone. So they're really not making a whole bunch. They're only doing it because they hope for a future client. They hope to be able to get the mortgage whenever they cash out. So even at $500, it's not a real bargain for them. So they kind of do it reluctantly. Some people may, but good luck trying to get somebody to do it for you. And even if you could find someone, again, 500 is a lot different than 50.
Yeah. Very true. Very true.
So, and then even if the mortgage broker were to do it, they don't have a credit repair company behind the whole thing. So in this service, we do. And in this screening service, we'll refer your tenant buyer over to the credit repair company. It's a very smooth transition. We use the same credit report. There's no inquiry on the credit report, and it's all can be done within one phone call. The transfer happens. They talk to the credit expert. If needed, they sign them up for the credit repair. And now the tracking mechanisms exists all the way back to you and back to the screening company. So that all becomes a part of their case file that you receive in a PDF format. And then you basically can put it on your computer or print it out and put it in their file. And when you offer them the property, now you have a very complete file that you did your due diligence to make certain that they are in a position to be able to get to that second closing table.
Excellent, excellent. And I've actually had mortgage brokers that I've worked with in the past that, some of them actually do the credit repair themselves, or some have partnered with some other company that does it. And I've had mixed results with that. But what I really like here is that you obviously have many, many case studies of success where you're able to get people through to the finish line, and you have a templated whole system. And this is what works. So it's a one-stop shop to have everything taken care of. So that is very, very appealing. And plus, the fact that it really doesn't cost us anything out of pocket pretty much makes it a no-brainer at this point. So please continue.
Yeah, I mean, and the proof is in the pudding. I've done this for hundreds of people. I mean, just within one person, I've done it hundreds of times. There's a gentleman in North Carolina I work a lot with, and he does this. He had been doing this with me exclusively for a number of years, and he says he gets 85% of these people that he signs up for this type of transaction to the closing table. That's a pretty decent number, considering that a lot of times, people that move into these situations are not married and they break up, and they lose, or people lose their job or whatever. It's typically not because of the credit repair or because of the failure in the screening at all. The 15% that don't get there, it's more so that life happens and they get run over by life from some other avenue.
Oh, yeah.
And they don't cash out from that reason. But you're giving them every chance of success whenever you go through. And so we have empirical data that will show statistically that we are getting somewhere around that same amount. No matter where you live, whether it's Cleveland or it's an East Coast country or city, or no matter where you're at, this process works. So this is one of the forms here that we have them sign. Basically, says that they're going to engage in the credit repair and that they're going to follow our instructions. And it also even goes on to talk specifically about, in this case, Joe samples what he has to do in order to be mortgage ready. He must come current with his automobile payment, must pay rent on time, and
that's
by check.
Nice. That is nice. Yeah, of course.
They're signing their name right here. They must do that, right? And if they screw that one up, then they're not they're not sticking with their agreement. Must provide proof the Chapter 13 is complete, and so on and so forth. I mean, I'm not going to read them all, but this is all from the credit report, and we're basically letting them know what they need to do. This is a part of their action plan.
Nice. So it's like a checklist. That's great.
So what we're providing with each one of our $50 applications is a sex offender report, a criminal background check. We're going to pull the credit report. We're going to do the debt-to-income ratio analysis, the affordability report. Behind that is all the underwriting guidelines for FHA, VA, USDA, Fannie Mae, Freddie Mac. And then we're also going to actually get their income documentation, W-2s, pay stubs, 1099s, tax returns, so on, and that'll all be in the file.
Awesome.
This is what the front piece of the Screen the Tenant website looks like. Actually, it's kind of changed since the time that I put this little image together here. It's got a couple other little add-ons here and there. But essentially, this is where your tenant buyer can enter by coming here and clicking on this button. Or if you're a landlord and you're filling out your application for your tenant buyer, you can come right here and click on this application. Since let's say you've taken the money for them already, and whoever does the application is the one who's going to pay for it. So just know that. So you can fill out the application. In other words, if you had an open house and you took some paper applications and then you want to use this to punch it in, you can do that here.
Okay, but again, you can also send your applicant to this page, to this site, for them to fill it out themselves, right?
That's the preferred method because everything happens electronically. It's all transferred. If you send us paper applications, we have to then put it into our system, and Joanne doesn't like that quite as much. she would prefer just to have it all already done. Okay, so anyhow.
Okay.
Next one. So this is what we say to your perspective. When people come in through Screen the Tenant, this is what we tell them. We basically have confirmed their address and we tell them why a lease option is valuable. Now, this is really cool, too, because sometimes, people are newbies and they don't understand how to sell a lease option to begin with. But, we say, hey, you know what? A lease option is a diamond in the rough. Mr. Tenant Buyer, you can understand that looking at your credit report, you can't buy a toaster on credit. And if you're offered a house in a community that you can establish yourself in that community, have your kids go to that school, and build equity while you're living there, and then cash out later on, what a wonderful deal this is for you. I bought my last 2 houses using this method. So this is an option that you're not going to get anywhere else. So you really should work with Tony or whomever who referred them to me. You should work with these people. And the reason why they're sending it through us is because they do want to see you at the second closing table. So we're basically letting them know we're edifying you. And you could talk all you want about why you're the best thing since sliced bread and why you're really actually doing these people proud by the way that you do business. But when some other professional is going to go to bat for you and help you sell that deal, pre-sell that deal, that's worth a whole bunch. And you're not going to, again, get that through my competitors, any credit repair company or any screening company.
Very true. And by the way, what is STT? Screen the Tenant, and MCT stands for?
Is my credit team, yeah.
Okay, just want to make sure that is clearly defined in case there's any questions.
So what's on your credit report? We go over that. We refer them to my credit team and offer them a free consultation. We walk them through getting their credit report, ask them to send us income documentation. And again, we don't discuss any details of the transaction. Hey, can I have cats and dogs at this house? That's not our decision. You're going to need to talk that over with the people who control the property. It may not be the people who own the property, but we tell them the people who brought you to us or people who control this property, please discuss that with them. So, this is what the My Credit Team website looks like. And you can go directly into schedule. So for people, for example, Tony, you have people maybe watching this podcast today who already have people in the house, so they don't necessarily need a screening. The middle of the screen here on the bar in the top says schedule. You can have them have your tenant buyer go directly to schedule and schedule a free analysis of the credit report because they came referred to us through you, the real estate investor. So that's one way to get them to us, or you can schedule them for. In other words, I got a person in my house, his name's Joe, and I want to schedule an appointment for Joe. I can click on schedule and go in there and schedule an appointment for Joe to be contacted by a person who is going to do a credit analysis for them. All we would need to know whenever you hit schedule, when you schedule this appointment, would be the guy's name, phone number, and best time to contact him. And then we would ask that you have already asked him and had him give you his permission to have us contact him.
Okay.
Did I say that right?
I think we get your meaning. Yes.
Okay. So anyhow, just have them give us permission, and then you can schedule appointments for other people, I guess is really what it is here. Okay.
Right.
And there's a bunch of information around it. As you notice here, there's a rent-to-own section. Other credit repair companies don't have a rent-to-own on their main page. They don't even know how to spell it. There's a credit building site. We talked a little bit about that, student loan consolidation. So there's some pretty cool stuff here. Again, the dynamics of everything here is all around what we do here in our industry. So what do we say to people whenever they come to my credit team? Because we already covered what we say to them when they come to us from a screening perspective. So what I would say to this person, let's say, for example, you've scheduled somebody. We've been asked to help with the credit as a piece of a transaction, and I go over how it works and why rent-to-own is a great of great value. And then again, we edify you. We talked a little bit about this before. And once they commit to enroll, we're going to let them know that this doesn't mean you're necessarily getting into the house. Well, if they're already in there, then that's fine. But on the onset, if they have just done a screening, doesn't mean you get in the house. It just means you have a documentable, trackable action plan in place that now is going to give the person that controls this property the warm fuzzies to let them know that you can get to that second closing table in a period of time in the future.
Mm-hmm.
So we offer a credit report guard program for those who have already been through our service and basically want to do something for $29 a month. We'll do all these things here, but we're only going to dispute one item at a time. And it's kind of like a credit. It's akin to a credit monitoring program. We're not going to notify you though whenever someone does this activity on your credit report, but we are going to go in there and dispute negative information on the credit report. It's more like somebody who has one or two items after they've gone through our service left on their credit report. We'll go ahead and continue our service for just $29 a month.
Oh, very nice. Very nice.
This is a really cool thing here, Tony. We offer this card. It's called New Coast Direct. And when you go and you apply for this thing, it's a $5,000 unsecured credit card. The criteria that is considered is on the right-hand side. You must be at least 18 years of age old or older. You got to be a U.S. citizen, have a Social Security card. You have to have some sort of prior credit history. What that means is you can't be a ghost. You can't have nothing on there. Now, people say, well, what if I only have one little medical bill that I didn't pay and it's a collection? Guess what? That's prior credit history. You would qualify. Monthly household income of a minimum of $1,600. So if you satisfy those, have no open active bankruptcies, or not behind in your child support payment, and don't have excessive tax liens, those three aren't on there, then you would qualify for this $5,000 unsecured credit card. Card costs $95 to get it, and you have to buy $100 worth of stuff in order for it to report on your credit report. Anything you buy during the first year, you have to pay off half of the balance at the point of sale. A lot of things behind the scenes there, but the long and short of it is this: a $5,000 unsecured credit card on our credit report is a major credit card. Major is over $1,000, minor under $1,000, and it's unsecured. Unsecured meaning I don't have to put up the $5,000. Secured, I have to put up the amount of money. I'm basically bet my own money that I'm going to make my payments. So you get much more brownie points as far as FICO is concerned with an unsecured large limit like this and a low balance. I have seen it improve the score over 60 points. Most times, though, Tony, somewhere between 35 and 40 points. It improves the credit profile, and it does it really quick. If you get the card on it before the 25th of the month, it will report on the 5th of the next month.
Wow. So, Paul, this is a great way for people to really help improve their credit scores and help to build their credit if they are still pretty new and just starting out but have some kind of prior credit history, as you said. But at the same time, if they've had any kind of bad credit history, it's a way to massively improve things very quickly for them, yeah?
Yes. Although the numbers, everything I've just mentioned to you were all based upon the person doesn't already have a major credit card. If they do already have a major credit card and they get this, they're going to only have a nominal effect on their credit report.
Oh, I see.
This is kind of like it has to be for somebody who doesn't have that in their background already.
Okay.
So, but yeah, what a tool, Tony, what a tool. And you're not going to get this anywhere else. So, by the way, I have the link for the application. If you go directly to New Coast Direct, and it will cost $150 for the application. So for any of the people online that want to have this information or listening to us now on this podcast, make certain that you send to me an email asking for the online application link. And you can email your request for that link to paul@mycreditteam.com, and I'll send that out independent of everything else, okay?
That email, once again, for the request is Paul
that email,
at mycreditteam.com.
Paul at mycreditteam.com. And team, credit and team have two T's, which run together.
Yes.
Here's the kind of an overview of what we're talking about for the screening service. You know, as we mentioned before, verification of income, credit report analysis, debt to income ratio analysis, and so on. So as you see here, there's a coupon code, and I'm going to get to that in just the next screen here. Tony, we're going to throw in a little bonus for everybody that's listened to this point in time. We're going to give them a coupon for $30 off for trying us. So here's how that's going to work. They're going to have to text to me their name, their email address, and then just the word coupon code. And I'll generate a customized coupon code, send it to them, and it'll give them $30 off whenever they use the screening service. It'll be rendered at the shopping cart. This screen here, Tony, this is the one that this tells basically what people to say. This is the script, if you will, how to refer business to us. And I'm going to go ahead and read this. The great thing about rent-to-own or a lease option is that you can move into one of our houses and you're given the time to fix up whatever is preventing you from qualifying now, whether it be credit or income. When you make application with us, you'll be introduced to our program, which prepares tenant buyers to qualify for mortgages. The application fee is $50 per applicant, and the applicant is defined as each person whose income will be considered when you apply for the mortgage. So you can paraphrase that. That's just a wonderful 2 or 3 lines as to exactly what this is all about, how to drive them to our website. Go to pre-qual team or screenthetenant.com. Actually, I prefer you use screenthetenant.com rather than pre-qual team. And click on the tenant application and complete the form. And you'll need to know my name, my email address, and my phone number, meaning you, the real estate investor. And then you'll be contacted from somebody from a 412 area code number. So anticipate their call and answer the call. And they will they'll work with you to make certain you can afford the property and provide us with some other standard reports.
So once again, Paul, this is what you want to say to a tenant buyer when they have come to the point of the process of really fully engaged in the application process to buy the house or to be a tenant buyer for the house. So this is what you want to say and how you want to start to begin the process.
Exactly. A mini script, and if you just read it yourself once or twice, they can paraphrase it as you see fit. But here's the the gist of the matter, and basically go here, apply, Mr. Tenant Buyer, go here and apply, and they'll send the report over to us within 48 hours.
Okay. And could you go over one more time the instructions that you want someone to use to get that the $30 off coupon again, please?
Please text me your name, your email address, and the word coupon code, and I'll generate a coupon code for you.
And what is the number? What is the phone number they need to text, please?
Oh, okay. Yeah, sorry, I missed that one. Area code 412. 412. It's 412-242-2733. Just text those couple pieces of information, and we will send you that coupon code by email, and it will be active for until I'll make it until 6/30/2020.
All right, do me a favor one more time. Say what number they want to text to and what specifically they need to put in that text. One clear, concise message, if you would, please, sir.
Text your name and your email address to 412-242-2733.
Perfect. Thank you, Paul. Please continue.
Okay. And the pricing for what the services we're offering is the screening is $50 per applicant. Again, the applicant's going to pay that. You don't pay it. Credit repair is $120 per month for no more than 9 months. Again, the tenant buyer is going to be paying for that too. When 2 people enroll at the same time, the second person is going to get a $20 a month discount for a total of $100. So 2 people would be $120 for the first and $100 for the second. So it's $220 total for 2 people, again, for no more than 9 months. Our Credit Repair Guard program is only for those who have completed the credit repair process and have an item or 2 on their credit report and would like to have us dispute that over time, as well as give them some tips and tricks going forward. The rent-to-own free listings website is free. It's a $500 value to be able to list your properties for a year, but since you've listened to this podcast today, you're going to get that for free. And we also have a lease option Turndown recycling program. We're just starting it now, and it's for those people who when you talk to them, they have first and last month's rent, and they don't qualify because they're not really thinking in the lines of rent to own. They're thinking more like a rental, but yet they need credit repair. So we would send them through our credit repair, and then you could farm that database, if you will, and have these people come back to you as they build up their funds so they can have enough money for a down payment. So rather than kick them to the curb, you got a place to send them. And that's pretty much it. Here's our 3 companies here, my credit team, pre-qual team, or screen the tenant, same thing, and the rent-own free listings.
Very good, very good. Okay, thank you for that, Paul. So if someone wants more information at this point, what will they need to do? And I understand that there's different people that may need different things. And I tell you, if you can go ahead and put that back up on the screen and just leave it on that last slide so we can have a visual for the video, that'd be great, because otherwise we get cut off and we don't have anything. We don't have any visuals here. We got to have visuals. We like the eye candy. And unfortunately, the videos of us handsome gentlemen, they'll just have to take our words for it. Well, we had some pictures earlier, but yeah, if you could share your screen one more time, that would be great. Again, there's going to be several different people who will want more information, and I have a few questions for you in just a second. If someone wants more information, there's going to be who would do what. So what if someone wants credit repair for themselves, what should they do next?
Okay, good. So if someone wants to do credit repair for themselves, Tony, because they're coming to us through your means of this podcast, we're going to be waiving the $79 analysis fee, and we're also going to waive the $119 setup fee. So the best thing to do would be to have them contact our main number, which is area code 412-242-2733, and they can let us know that they've seen this podcast. That would be great. Or else, if they're not, they don't want to get on the phone and call, and they just want to schedule an appointment, they can click on the go to My Credit Team, and again, in the middle of that menu bar in the middle there, it says free evaluation. Click on that, and that will take you to a You Can Book Me website. But basically, you select the time that would be best suited. Especially this is useful if you have like you and a spouse that want to be on the line together, and do it in tandem, or you're on speakerphone, or we can do a conference call. Then the You Can Book Me website works much better because it also sends out text confirmations.
Awesome. And if they want really preferential white glove, awesome professional treatment, they should definitely tell them that Tony Pearl sent them, right?
Right. They're not only going to get the free analysis, which is $79, but we're also going to waive the $119 setup fee. So, Tony, we're going to be waiving $198 of fees because it came to us through you. Sweet.
That's fantastic. I really appreciate you doing that for our listeners and viewers here, Paul. It's very nice of you.
Hey, this is Tony. Thank you so much for listening to this awesome presentation and interview with Paul Ritter of mycreditteam.com. I hope you've been enjoying. In this presentation, we've been talking about how to get your tenant buyers screened, pre-qualified, and ready to buy one of the homes that you are offering them with one of your programs. This is going to conclude this first presentation here, but what we're going to do is pick it right back up in a question and answer session to be concluded in the next video, which will be on this page. Thank you so much for watching, and be sure to listen into this question and answer session where you're going to get more information and know what to do next. Thanks, and we'll see you on the next part.